Mr. Parekh, people say that he typically attends 5 weddings a day. There are some days, and even 6 parties a day. But it has not been easy to get, sir. I mean, it's one of the rare occasions Mr. Parekh is here. And he wears many hats. You don't need to tell him, because repeatedly he said no. But one, I am just tempted to say that he is the unofficial crisis consultant for the government of India. You look at the history of Indian economy and BFSI segment from economic liberalization. Every crisis, Mr. Parekh is there. Whether it's a UTI restructuring, Parekh committee. Whether it's Sattam crisis and Sattam rebuild, again, Mr. Parekh. Whether it's a Narsimham committee on banking restructuring, Mr. Parekh is member. Malhotra committee on insurance, Mr. Parekh. Infrastructure committee, telecom committee, I mean, you name it. It's always, is Mr. Parekh, Mr. Parekh, Mr. Parekh. So it's, apart from the fact that he built, yes, his uncle was the architect of HDFC in 1978. And 1987, he quit his job in Chase, right, sir? It was Chase. And 50% cut as a deputy manager he came. And then he created history, identifying the HDFC chairman. That's also him, and who would run the bank. So here I stop, because you will get angry now, upset with me. I mean, we can talk what he has done for the Indian financial system, infrastructure, telecom, roadways, airport, etc., etc., etc. So, Mr. Parekh, I don't know how many of you know that when this COVID struck and all those, it was a sort of dark days for entire India, entire world, and particularly for the real estate segment in Bombay. And then Maharashtra government reached out to Mr. Parekh, a committee headed by him, how to revive. And then he came out with the plan of cutting the registration fee, I think 50% and some even less, and also how this stamp duty, of course, and also you did certain things about how the builders can get more SFI very smoothly, and compensation for that will be less and all, and that revived the market in Mumbai, market in Maharashtra, and the other states started replicating that. So this is a mortgage seminar. Why don't you tell us, sir, why did you do that? How did you do that?
First of all, let me tell you that there's no other journalist as persistent and persuasive as Tamal Bandyopadhyay. Not only he followed me and forced me to come, but he also forced me to wear a jacket, which I don't wear normally. Anyway, this decrease in stamp duty and the increase in FSI, this is a one-time exercise for a short period of time just to kick-start the housing sector, which was in the doldrums. Housing sector was in the doldrums. People were reluctant to buy. The demand was there, the latent demand was there, but people were not willing to buy. And this gave an impetus and a time limit that in 6 months or 3 months, the stamp duty will again go up. The FSI, extra FSI, you won't get after a short period of time. So that got the developers enthused to take on more projects and take a higher FSI. That got consumers to go out and buy and save some money on stamp duty, and that's how it started. And I have never seen the housing market as buoyant as I see today. We were talking about 7 cities and 6 cities. I think the number of residential units sold in 2023 has been 5 lakh units. Mind you, these are residential units built by developers. I'm not talking of land, people buy land and building on them. That is over and above that. These are flats that have been built by developers. So 5 lakh residential homes. And out of that, 15% have been in the MMR region, Mumbai Metropolitan Region, which excludes Thane and Dombivli. So Mumbai Metropolitan Region has seen 15 out of the 5 lakhs, 1.5 lakhs. So the housing market is booming, and this is a 31% growth over the previous year. So, the developers have not had it so good. And we saw growth in all the cities except North, where at least what we saw was bringing down the unsold inventory. There was a large unsold inventory in North India, which came down sharply as the housing sales increased. And the point that you made on Maharashtra government's one-time incentive was just to kickstart the economy, the housing sector. And it worked. And they reversed back to the original stamp duty and the original FSI. So it was a short-term gimmick to kickstart the housing sector.
And some of the other states also
latched
onto that.
Some of the other states.
Mr. Parekh, we have been discussing about this affordable housing. One is this: there is an incentive scheme. I think it's called CLSS, which is stopped now, and I think in some format it would come now. The other part which has come out from this, from talking to people in the panel and all, that affordable housing needs to be seen through a different lens, because the kind of pricing which is talking about, we can't have the kind of with that kind of pricing we can't have houses in certain areas. And also post COVID and all, and the economic growth, the ambition and aspiration of that level even below poverty line also gone up. So, sir, I mean, as I said, you were there in every committee of the government, be it infrastructure, telecom, and airline and everything else. So tell me, how should we look at this affordable housing, and what needs to be done?
See, again, the impetus of affordable housing came when the government introduced the CLSS, Cash Link Subsidy Scheme.
Yes.
And the Cash Link Subsidy, we were the largest institution dispersing loans.
HDFC.
HDFC. And the scheme was very well managed, operated by National Housing Bank, and the full credit should go to NHB, because we used to fund a person up to 90%. So he had to put a very small amount up front. And we could get 10% of it back from NHB. And the government subsidized for first-time owners. And there were restrictions on the size of the house and all that. But it worked well, and it again encouraged builders to make smaller housing because the demand is there. Now, unfortunately, today, I see very few developers making affordable homes, making small homes, because the demand for luxury homes is so high. Most of the flats sold in Bombay are over 1 crore and above. Now, those are not called affordable homes. So we have to come with something which incentivizes the developer, which makes the developer take on projects to make 400, 500 square feet homes, and some incentive should be given for that. Otherwise, we are leaving the mass janta behind, and only the middle class and upper middle class, lower middle class, upper middle class. But we have to concentrate on affordable housing, which unfortunately in the housing boom has got, after the withdrawal of the CLSS scheme,
yes,
it has got lesser importance. But the finance minister did mention in the budget that urban housing, for urban middle class housing, they'll come up with the scheme subsequently.
So that scheme, what should be, how should it be different from that earlier CLSS scheme?
We don't know. We don't know yet.
No, any
government has not formulated anything. We tried to tell the finance minister, the government, that the CLSS scheme should be continued, but they had some budgetary constraints, so they had to withdraw it. But we don't know what the new scheme will be. I think the new scheme will only come in the budget post the elections.
Mr. Parekh, after HDFC's merger with the bank, now in private, the developers say that now there is no financial institution where we can knock the door for finance, because under the banking norm, Reserve Bank of India does not allow the banks to give developers financing in terms of buying land. Now, if the banks will not do, and the banks are about, say, 80% of the entire 7.5 trillion market. So how does this side, which is the demand side, No, supply side. Demand side, everybody is buying houses and government is trying to figure out certain schemes for certain segments of society, and the bankers are giving money. Some people are getting and some people are not getting, that's a separate story, or they have to pay a little more to the NBFCs than banks and all. But when it comes to developing, buying land, HDFC was sort of the only safe haven for them, but now HDFC is not there, and we can't blame HDFC Bank because the bank is not allowed. So how do we fill in this HDFC's absence in the market? And in a larger question is this, how do we address the supply side issue?
See, I think it's a fallacy that banks are not allowed to lend for land. In any urban area where you look at London, New York, Bombay, anywhere, land constitutes 60-70% of the value of the house in urban areas. It's the most valuable part in a house. The construction cost and all the other architects and engineers is much lesser. In fact, in South Bombay, some developers say 80% is land cost, 20% is the construction cost and their margins. So if land is 80%, you have adequate security to lend some money against land. Now, what is happening is, since banks are not giving money for land purchase, and land is the single most expensive, largest component in the cost of a house, developers have to resort to short-term borrowings from NBFCs, from foreign firms, from firms like Vipul, who charge 17-18%. AIF. And they charge 17-18%. These are short-term to medium-term loans. Because as soon as they get the land, they get the registration, they get the plans approved, and they start construction. After they start construction, they go to a bank to get normal construction finance, and the NBFC loan is repaid. Now, I think this is the wrong policy. Nowhere I think the banks don't lend for land. If a developer buys land, why can't we lend 50% of the value of the land? The land is not going to go away. And it's urban land. So I can understand rural land where title problems are here. You know, here in urban cities, we do 30-year check. The lawyers do a 30-year check on land ownership. So we don't have an issue of right title also. So the title is right. And you know what is happening in big cities is all the factories are closing down and going interior. And residential housing are coming. You saw Siemens, Glaxo, number of Tata factories, Voltas, all of them have gone much beyond, and they've shut their offices and they've sold it to developers. So I think that to encourage even affordable housing, banks must be able to lend for land. It is a safe security, provided you do your title search, provided you ask the developer to put 30, 40, 50% also in the value of land. Why increase the cost of the house? Developers are borrowing in the informal market at 22% to buy land. So that much margin is there. If you want the real estate prices to come down and become more affordable, why can't banks lend money for land? I just cannot understand that. And the second thing which I don't understand is prepayment charges. We are not allowed to take prepayment charges. I heard the earlier session when you were talking about securitization. You know, retail securitization is taking place every day, where State Bank comes and buys a loan from HDFC after we've dispersed, 6 months afterwards. No prepayment. Or Bank of Baroda buys it, or we go and buy it from ICICI. If you know the amount of refinance that takes place in the first 2 years of new loans dispersed, it is mind-boggling. Each organization have a team of people trying to get loans from other institutions to grow their book. At the same time, they're losing, at the same time, they're getting. Why waste time? We want incremental housing. We want additional housing. We don't want substitution. So retail securitization in a type is happening.
Sir, I mean, you said that it's very true that one HDFC gives a loan and the next 1 year...
it's taken over.
Taken over.
By my friend Dinesh Khara, who was here earlier.
Yeah.
And we go and take one loan from him, one retail loan from him. So, you know, it's a...
But the reasons is probably 25 basis point cheaper, that's a separate story. But once it's from HDFC stable, the next lender knows for sure the certainty about the property and all, because your credit appraisal and risk management is so meticulous.
You know, Tamal, in one of your papers, I've seen an advertisement from a bank saying that HDFC loan holders, we are happy to refinance you at a lower cost.
Right, sir. So
Advertisement in your paper. Now this is the market. And we need more housing loans. We need more housing, not just take one and give one.
No, but tell us, how did you create that kind of mechanism?
Prepayment charges, worldwide there is prepayment charges.
No, that...
First 2 years, if you prepay, you have to pay a penalty. That discourages people to bargain for a 0.1% savings in interest rate.
No, that's absolutely, your point is very valid. Two things you made, that one is Reserve Bank of India must allow the banks to finance land, because in particularly in urban areas, they are pretty good land records, ownership is not an issue, and is fully collateralized, and the builders also should put some money on the table, and the bank should come in.
It has to be 70-30.
And second thing you are saying is this: if you want to expand the market, it's not through the repaying and changing the bank or changing the lender to create new things and all. So that's absolutely clear.
And some stress on affordable housing, some incentivization must be given. Otherwise, why would a developer build a 500 when Abhinandan can sell 1 crore and above flats? He doesn't have to build small houses. There's better margin. There's a fewer customers to deal with. It's assured of, because they are well-to-do, he's assured of payment.
Abhinandan, you are here listening to him? Okay, he's there. Okay, so just tell us, but how did you create that image that I am ready to take over HDFC Bank's loan? Because you are not very tech savvy in terms of HDFC, never had that thing that you are based on AI and other things and all, not that kind of digitization. So this risk management and about going through this, is there any lesson that our audience can learn from HDFC?
No, risk management is, first of all, 80 to 85% of our borrowers were salaried employees. So salaried employees, you can gauge their income, their repaying capacity, and every non-salaried employee, every self-employed person always says that my income is much more than what I'm showing, and they want a higher loan. But we never gave a higher loan. We gave loan exactly according to the salary shown or the tax paid. The returns showed what is the revenue, what is the income. And we did not do funding the house, we did a cash flow funding. So even if a person, he says, I'm paying 80% and I only want 20%, but if he's buying a house where even 20% is difficult to service from his income, we will not fund it. So it is, you have to fund on the cash flow and not on the value of the house, because that's the first principle of risk. And then you have to ensure that his investment is there, his sweat is there in that, and you disperse after he puts in 20-30% of his own money. And it should be visible from his bank account, it should be visible from the developer's account that he's been paid. So, he has his equity in it before you start lending.
So the so-called loan to value, LTV, always
loan to value. Loan to value, and his contribution should come first.
So LTV is what, 80%? That is your contribution?
70 to 80.
70 to 80, and I need to bring in 20 to 30.
And salaried people are more reliable because their income is more certain. Business people, his volatility is high in their incomes.
So the HDFC portfolio is predominantly salaried people?
It is salaried. I would say 85%, 80 to 85%. Now salary, government servant, railways, army, across the range.
Mr. Parekh, also tell us, say like, if we see in India, it's now 30.7 trillion, 30 lakh crore, 30.5 lakh crore, which was last June end. It's more now. There are banks, there are NBFCs, and there are HFCs. Now banks loan rate is the lowest. Right now it's 8.25 something. In the recent past it came down to 6.5, 6.75, etc. NBFC is the highest, HFC is in between. Now an entity like HDFC, which is a single product company but hugely profitable and always right kind of growth, 20%, 25% growth every year. Now you did not have bank deposits, but you are taking money from public, right? But you could compete with banks almost on the rate front and all. And as a result of that, your NIM was pretty low, about 2%. But still you were supremely profitable because your expenses was very low in single digit. So how do you do that? How do you run a mortgage company where money is in short supply, particularly long-term money? We don't have the long-term money, that kind of market here. But you continuously need to source money and you give loans to people at a very affordable rate, and at the same time keep the investors happy by making tons of profit.
No, so you see the top line for a bank and a top line for an NBFC. At what rate they get deposits and we get loans, or we get term deposits. They have SLR and CRR restrictions. They have priority sector lending. We have minimal restrictions. So when you come after that,
but as a large NBFC now, systemic risk,
now you have to do LCR and all. But
yes.
that time we had 30, 40 years of free time. Okay. When all these rules were not there.
Right.
And there was an arbitrage between banks and NBFCs. And so we took that advantage, and we could compete with banks because our cost income ratio was very low.
How could you keep your costs so low?
Efficient underwriting.
Because it's not that you don't pay your employees well. You pay well, you give them stock options.
No, but we are not the best paymasters.
Okay.
And we were not the best paymasters. We compensated our employees by giving stock options.
But they never leave HDFC.
They never left us, but because they kept on getting stock options, everyone in the organization. Okay. So we had loyalty because they owned the company as much as the public did. And so we paid lower salaries and compensated by ESOPs. And therefore we had to compete with banks, otherwise we would be running out of business. Then our net interest margin would not be 2%. We had to show that. And because of better quality underwriting, our provisions were low. And that also helped.
So do you think that we need to approach the entire mortgage market, apart from what government can do and what Reserve Bank of India can do, also from the credit assessment and acquisition of customer in the digital era? I mean, the HDFC is an animal from a different era, and now if you start right now you want to start a mortgage company now on the line of HDFC, what will be the guiding principles?
No, you can save still some more cost if you go digital, but we still have, house is the largest purchase a family makes in his or her lifetime. They want to have a feel of who's lending them money. They want to know whether the price they are paying is right or is high. They want to know whether the builder is reliable or not. So they need to come and see someone face to face. It's a big thing in everyone's life to buy a house. It's not easy. And you scrape all your savings, you borrow from your family members, and then you come for a top-up loan on the balance you require. So they need contact with the person. The other thing is signature. We have to get them to sign. They have to go to the registrar's office to register the document. Wet signatures are not yet allowed, permitted. So, you can start digital. You don't need to call them 4 times into your office. You can call them once and get the work done. That way, it will be much more convenient now. And with the credit bureau. When we grew and we were there was no credit bureau. Credit bureau is a 10-year phenomenon where you can get details of an individual, and it is so effective. Every borrower who comes to us for a loan, we first send it to the credit bureau. You know whether the history he has given in the form is right or wrong because the credit bureau gives you the information. How many checks have bounced? Is his credit good? All that you get from the CIBIL records. So it is safer now to lend to retail with all the checks and balances, with RERA, with the credit bureaus.
Do you see also a role of the so-called guarantee or insurance, like this evening who is organizing IMGC?
No, there is a scope for that, but it never took off in India. Securitization has never taken off in India. It's never ever taken off. If it has to take off, this is the right time because there's shortage of resources. There's dearth of deposits. The assets, banks' assets have grown by 20%, deposits have grown by 13.5%.
Yes.
There's a shortage of liquidity in the system.
Yes.
And this is the time when housing finance companies may want to refinance and get some fresh money. This is the time when some banks who have surplus liquidity may want to take a package of portfolio and take it and give money to a smaller NBFC or a smaller housing finance. So it should be, I think it's an opportune time to get some kind of securitization started now. But guarantee what is happening is that because the end rate a borrower pays is so competitive, that he wants to see that if you get a guarantee, you have to pay the guarantee corporation.
Yes.
If my other bank does not do that, he can offer a loan which is few bips lower. Then people will go there, then you lose business.
This is a very, very price sensitive
Very
money.
price sensitive. 0.1, 0.2% also, it's very sensitive. People shop around with 2-3 organizations before they go. So we have to be, if you want good credit and if you have to be competitive. Or your credit is weak. There are some NBFCs who are giving housing loans at 14% today.
Yes.
But then their non-performing loans may go to 5 or 10% also.
Absolutely. What would be the historically HDFC's in NPA?
No, our retail NPAs were very low. They were in point something. Yeah.
Few basis
Few
points.
basis points.
Few basis points and all. And what has been, Mr. Parekh, your experience about giving loans to the builders?
Our experience has been mixed. Most of the developers who are there today, we've been funding them for the last 40 years. And they've grown because of our support. And we needed them. Some developers over-leveraged themselves. Some developers were reluctant to sell land when they got into trouble. And they got into trouble. And so we've had a mixed, in the last few years, we've had 2 or 3 cases which sort of defaulted. And you know, the NPA definition also became more tighter and tighter. This 90 days is very difficult for a developer because it's a 5-year project. And you know, they have the unsold stock. If they sell the unsold stock, they can repay the loan. But that interest payment they cannot make in 90 days, you still have to make.
Absolutely. This is following Reserve Bank of India following that, as you rightly said, the arbitrage opportunity between banks and NBFCs, particularly the large, systemically important NBFCs, they are treated almost on a par with banks when it comes to assessment of bad assets as well as the liquidity leverage. Mr. Parekh, you spoke about how the government should approach the affordable housing segment or the incentive. You spoke about how the RBI should approach the land financing. But tell us about the regulations. So there you think we need to take a relook because after this in the NBFC, particularly HFC segment that happened in the past few years, now NHB has been stripped off of most of its responsibility, right? It's become a sort of refinancing. And RBI has taken the load of it. So is this the right way to do it, or we should have actually a separate mortgage market regulator?
No, I'm not followed what has happened in the last few years. What has remained with NBFC and what has gone to RBI. So it's not proper for me to comment on
that.
It.
Supervision and inspection
So
that
has
been
gone
a
to the
division now.
RBI.
Yes, yes. And NHB is primarily now at this point of time is a sort of refinancing. You know?
No, but that should be okay.
Tell us.
But you know, we should talk now, in cities, we have to now talk about how to reduce pollution. Because worldwide, this is getting a lot of attention. And we have to also, our municipalities have to look at that. And you know, how to keep the sustainability momentum going. And bulk of the pollution in cities, at least 30-40% is due to transportation, mobility. So we have to, you know, there is a massive transformation going on around the world in mobility and in electric power supply also. So electric vehicles, and we have to get more into that in cities. You know, you see some of the European countries, 95% of the cars will be electric cars.
Yes.
And the amount of money they have invested in multimodal, affordable public transport system so people don't have to use their cars. They have bike lanes. They have all kinds of things, incentivize people to go on bicycle or on two-wheelers, shared taxi services, how to reduce pollution in a city. We have a lot of work to do because, every third person in Bombay is coughing and has got a cold now because of the pollution. And cities will have to now think, city administrators will have to think about this, which is a much bigger problem than trying to find a bank to fund your housing loan, I think.
Sir, nobody could feel the pulse of the real estate market than you. All of us, most of us from Mumbai, so just one question is, we have a vested interest. People are talking about that there is so much of redevelopment in Bombay, which adding to pollution, what you are talking about and all. But that's also, you'll see very soon that the supply is more than the demand. So the housing pricing cannot go up anymore. Is that the correct assessment? City like Bombay, where every road is dig up for road development, and every second house has been, because it's already lived 25 or 30 or 50 years, the builders are going for fresh FSIs and new FSIs, and vertically they are going up. So supply will outstrip demand in the next 2-3 years. Is that the...
I don't see that. I thought demand will always be greater than supply. And there's a shortage of land. You are not making new land available. And either you have to go higher up.
That's what is happening.
To bring prices down. That can bring prices down. If you increase the FSI, that can certainly bring the prices down. And environmental lobby is so strong that you are not allowed to reclaim too much land to build housing. Like, Nariman Point was water when we were growing up. It was all reclaimed land, but now, due to this environmental issue, your government cannot reclaim large amounts of land to build housing. So one way is to go up, to reduce the prices of homes. Second way is to improve the traffic, the transportation, which we are trying to do. Government of Maharashtra and city, BMC and MMRDA spending huge amount of money. Metro, new roads, coastal road, so that people can live far away and still commute to work. And work from home is taking importance. So 2-3 days people who can work from home are doing that. So these are some way, electric vehicles, solar power, these are some of the ways where cities will have to think how to reduce the greenhouse gas emissions.
Sir, we have 3 minutes left. I want to ask you, it's not part of the mortgage conference, if it's okay with you, about the merger of HDFC and HDFC Bank.
But it's done and dusted.
And before that, no, it's not. Before that, I just want to have a last word on this in this mortgage conference. I mean, what are the key lessons learned or the suggestions from you to the government, to the regulator, to the developers, to the buyers? Just tell us 2-3 things, and then I'll get into with your permission, to the last point.
No, when Reserve Bank of India came out with a rule or came out with a notification classifying NBFCs into 3 categories, large, medium and small, and said that bank-like regulations will apply for large NBFCs, the writing was on the wall for us, and the definition of large NBFCs of RBI was 50,000 crores and above. And that time we were 5 lakh crores. So it was a huge amount, and if bank-like regulations applied to large NBFCs, like if we had SLR and CRR and all, then we would be totally uncompetitive. And RBI helped us in the merger, in fact persuaded us that we should, and they were very receptive to the idea, and they were wanting it to happen. Because it was a large organization, there were always systemic risks in their mind. And so it was done with the full support of the Reserve Bank of India, I would say.
But certain things, I wanted to ask you at the end, but since you said that, but certain things the merged entity did not anticipate, like the margin coming under pressure and generating lot of
the margin is coming under, there are 2-3 things. See, number of loans that HDFC have taken, they are maturing over time. So the bank has to repay those. And the system is short of liquidity. and the system is short of liquidity because Reserve Bank is concerned about inflation. Inflation is still above their comfort zone.
Yes.
Marginally above their comfort zone. Particularly, Reserve Bank is worried about food inflation. And food inflation is higher.
Yes.
And that impacts majority of the people
Yes.
in our country. So
Yes.
they have to contain that.
Yeah.
And therefore, they are tightening the liquidity. It is a situation where if you spend more money than what you have in your pocket, what happens? So banks are scrambling for more deposits. There's enough demand for loans. So that's the reason you have to borrow at a higher rate for deposits, and therefore temporarily your NIMs shrink. You have to repay loans, old loans. And there's a dearth of liquidity in the market. You need money to give new loans. You need money to repay loans. And there is shortage of liquidity. So it has to, it sort of resembles in your cost of borrowing.
So
nothing, I don't think there's anything to worry about. It's a temporary phenomenon.
It's a very short-term challenge.
It's a temporary till liquidity is tight. See, today, as I mentioned, if your growth is 20% and your deposit base is growing 13.5%,
Yes.
there's a gap.
Yes. Now, how do you bring back those guys who are leaving the bank fold and getting into equity market and all? That's what the perception.
Getting into?
Equity market directly or through mutual fund. You look at the demat accounts rising, etc., etc. So it will be a bit of a challenge for the banking
It
segment.
will be
right?
a challenge because, mutual funds are getting a lot of money in the SIP.
Yes.
And insurance companies are getting. So raw material is cash, it's savings.
Yes.
Ultimately, what has to happen is the savings of the community has to increase. If the savings increase, then everyone will get funding. The savings increase must be there.
Yeah, so the challenges which HDFC is facing post-merger, it's a short-term challenge because of the systemic liquidity issue.
See, I have nothing to do with the bank, so
Correct.
I can't answer whether it's short-term, medium-term.
Okay.
It's wrong for me to answer even whatever I've said, I should not.
Fair enough.
I only said that HDFC loans have to be repaid by the bank.
Right.
And there is a shortage of liquidity.
That's it. That's fair enough. So I come back to the last one, sir. What is your one-line advice or suggestion for the home borrowers, for the builders or real estate developers, for the government and for the Reserve Bank of India? There are 4 constituents.
4.
For development and growth of the mortgage market.
I think India is in a very sweet spot at this moment, and we should not lose this moment. And we've never been at this stage when we are the fastest growing emerging market. And even this year, if you see the latest World Bank report, it says 3rd consecutive year the world is degrowing, decelerating. And global growth, which was 6%, has come down to 2.4% global growth. But India still will have 7.3% GDP growth this year, whereas not by Indian government standard, but by the World Bank. And so we are in a sweet spot, and we should encourage more people to own their own homes. We should encourage developers to make more affordable housing. And because home is someone's, where you get peace and you get security, and it's long-term security for the family. And so home ownership encouragement is a good thing for governments to do.
Thank you. So this is Mr. Deepak Parekh, whatever you call it, the guru of and the maker of chief architect of Indian mortgage market and even beyond. So I don't want to summarize because he's very succinct and very precise what all needs to be done. He had said that why the bank should be allowed to buy land, to support buying land by the developers. At the same time, the developers should.
Office to write an article.
Yeah. Okay. So, but at the same time, the developers should also bring in money on the table and how the market is evolving, the opportunities and everything. So if you like, give him a big hand. Thank you.
Thank you so much, Mr. Parekh and Mr. Bandyopadhyay. At this point, can I request Mr. Mahesh Misra, MD and CEO of IMGC, to hand over a token of appreciation to both Mr. Parekh and Mr. Bandyopadhyay. Ladies and gentlemen, can we give a huge round of applause for this round of Fireside Chat with key takeaways of incentivizing developers to build smaller, cheaper homes to widen housing accessibility, RBI needing to allow banks to lend finance to developers to buy land to decrease overall housing cost, and prepayment of loans to be normalized in India to provide buyers with multiple negotiation points, and the need for investment in building sustainable, non-polluting modes of transportation to reduce high level of pollution. I think very discerning, very versatile, yet to the point conversation. Thank you so much, Mr. Parekh, for your time.